Panel discussion that is shaping the future of banking, trends, innovation, and trust in cashless digital era. For this, I would request Mr. Nishant Pradhan back on the stage for the moderation. A seasoned professional with over 2 decades of experience in analytics, data, and technology. He is currently serving as Chief AI Officer at Mirae Assets and a visionary leader with expertise in leveraging data and AI to drive growth, profitability, and operational excellence. He excels in building organizational capabilities, developing talent, and creating impactful products and services. Along with him, I would request all the panelists, Mr. Ashton, Executive Director, CAO and CISO, Natwest Market, Mr. Sanjay, Sharda, Head Consumer Banking, Utkarsh Small Finance Bank, Dr. Kshemendra, Head of Communications and Customer Centricity Agency Business, Tata AIA Life Insurance. Can we have a huge round of applause for all of them?
I know our session is just before lunch, so we'll try to make it very interesting. The topic is very interesting. I think, so there will be a lot of resonance between what you have been hearing since morning. And it's very difficult to meet the standards of the previous session. I've attended his session earlier as well. And so it's phenomenal to see what our government is doing. I would start with, some basic themes that we observe, globally as well as in India. So I come from investment management where we look at themes, globally, and I was talking to these panelists, just before this session. So maybe at a high level, what we see is, so one is the mindset of the next generation, the future generation, which would be our workforce as well as customers of the future. I think all of us are trying to understand, what is the mindset of Gen Z, millennials. So we all are, 45 plus, and we have been there. We have seen the industry evolve. But how different is today's and the next generation? That's one theme. The second is, of course, digital. Which is the theme of today. So this generation has been born and brought up with YouTube and WhatsApp. They have not seen the world that we were born and brought up in. So that is impacting all industries and even BFSI. So yeah, we'll talk about this theme. And the third, which is very relevant to India, is our financial inclusivity, where we want to reach out to the whole of India in terms of financial products and how seamless can it be. So that's the third theme. So on this note, I would, ask my first question to Sanjay. So Sanjay, you work for an Indian firm, financial services firm. What is your view of the impact to our traditional banking, with the advent of cashless and the UPI story?
So I think, first of all, thank you for inviting me here. I think, so what is happening is people like me, I used to carry cash. Today, carry 500 rupees. I have my mobile, I put my driving license and my credit card and UPI. That's the bank for me. I think that is the biggest change one can ever see. And I think majority of us, if you see the number, I think Mr. Sunil was talking about the number of transactions which are happening on UPI, it's 15 billion. Imagine if you divide that by number 30 days, it's unbelievable. It's probably more than the entire population of Europe and America put together. That's the kind of numbers we're talking about. So it's really big, okay? So I think while cash, if I were to look at it from real estate perspective, where you used to have 40% cash and 60% check, or it's moved the other way around. It's now cash has come down to maybe 20-30%. That too, the sub 2 category builders, because if you look at a Godrej or any of these big builders, they want everything on via RTGS or NEFT and with TDS and all that. So that's gone. But at the tier 2, tier 3, tier 4, tier 5, tier 6 towns, you will still see a lot of cash, especially in tier 2, tier 3, and tier 4, and tier 5 and 6. There's still a lot of cash which is there. As a bank branch, we still burst our CRL, which is a cash retention limit almost on a daily basis, because all the cooperative banks dump so much cash. So there is cash, there is enough cash. Even the RBI tells you that the currency in circulation is now more than it was pre-COVID. So I think all this talk about digital is there, but yes, In parallel, the currency is all there. But I think the biggest change which is coming is the Gen Z or Gen X, whatever you want to call them, which is coming into the workforce. So for them, they have seen a mobile phone or a mobile app first and the branch later, even including my kids. My daughter has never been to a branch, but she's definitely seen a mobile, app. She knows how to, like, Papa UPI kar do, right? So that's like a normal lingo for them. Similarly, when I see kids even younger who are in school, they are so addicted to a iPad or a phone. That's the first thing. I think even I've seen kids who are like 2 years old, their mother, gladly gives them a mobile phone. Ki chalo mere se to, so time chudega. So these kids, if you see, they would always want to be on the mobile. I mean, I see that when I look at the population, people who are 35, 40 plus still want to go to the branch. People who are lower want to have a mobile app. They want to just do everything on the mobile. I mean, I would never buy shoes online, but my kids will always buy shoes online. So I think that's the major shift which is happening. And as we move, in the next 5, 10, 2030, 35, you will start seeing a lot of physical shops becoming smaller and smaller. And same for the branches. There'll be more of sales and service outlets, but the real sale will probably happen on the digital means. That's what's coming. And I think the way AI is moving up, it's just a matter of time. I think we will start seeing a lot of the basic sales happening on an automated route. That's my thoughts.
And I agree. So that's the change which is impacting all of us. So my question to Ashton now, we heard about, the story in like Indian banks. How about global banks? Are we going to have branches anymore, or what's the story there?
Hello and good afternoon, everyone. I'm sure most of you will be bored by the time I finish this panel because it's my second time on the stage. I'll start with the same disclaimer. Views are personal. And I guess we can follow Chatham Rao's rules. The opinions can be used and propagated, but do not link it to any panelists as such. Coming to your question, I will not limit my answer to just global banks, but generally, are physical banks passe, or do we still see the need for brick and mortar branches? And I'll take upon 2 points that Sanjay has actually picked up on. First and foremost, we need to understand transformation is usually driven by customers. And as banks, we need to adopt and adapt to the changing needs of the customers, more holistically, generations. Okay, where each successive generations has greater awareness of what is required, and with them, there are increasing customer demands. So whilst we talk about digitalization, we talk about digital banking, we talk about virtual banking, etc., which is all there to stay. We talk about collaboration with fintech players, partnerships, etc., they're all there to stay. We also need to know these 2 points and what Sanjay alluded to. Banking is not just urban banking and metros and tier 1, tier 2 cities. Banking, especially in a country like India, is into the rural areas where accessibility is still an issue. Okay, so we need to reach out to those areas, and that's where the physical branches or the corresponding banking requirements still work out. Secondly, we also need to understand, and again, this is something that Sanjay alluded to, we are talking about generations here. Since the turn of the century, there have been 7 generations that we have gone through. If we don't consider the earliest one, which is the greatest generation from the 20th century, 1901 to 1924-25, and we don't consider the latest, which is the Gen Alpha that they call them, 2013 onwards, because they're too young to do banking anymore. The intermediary 5 generations, starting from 1925, finishing in 1945, where some of the elder citizens, senior citizens are still alive, still are customers, especially for the lineage bankists. 5 generations is what we are banking to. Each of them have different needs. I may ask a Gen X, a millennial, and a Gen Z to go into digital banking, but the senior citizen still wants to come to the branch and meet the manager, and we have to cater to their needs. Okay, banking is not just about providing the products, it's about trust and service. And still we are able to do that, we need the physical branches. Old school thought, but that's my way.
That's very interesting. So as you saw on the stage, so there are 2 different schools of thought. At one end, we agree that, digital is going to disrupt banking. And now at the other end, there are still some thoughts around say who will get disrupted, and you'll have different types of customers and segments, and you need to cater to all these types. So coming back to Roy, so you are from insurance industry, and so how do you solve this problem of different types of customer? And you play a very interesting role, because you play the role of heading customer centricity and communication. So how do you deal with these different types of customers? As he said, it could be rural, urban, it could be Gen Z and the older customers. How do you ensure that they get a very seamless omni-channel experience?
Thank you. The question is very pointed, and I'll give you a very simple answer. Being from the field of academics, I divide my customer pre-internet and post-internet. The people who have experienced banking, insurance, financial products, postal services before the arrival of internet, and the customers who have experienced it post the emergence of internet. We have personality traits for all set of customers, whether we segment them into different generations, alpha, beta, gamma, whatever generations is going to come, or we practice, as Sir said, the physical branch banking or physical insurance buying. Few lines of communication, a few lines of service will run common across. Personalization of services, whether it is in the digital domain or in the physical domain, will always be important. A digital domain personalization will be offering a customized product to a person who is operating on an app, operating on a website. A personalization to a senior citizen or a person close to retirement or a 45 plus, which I don't think all of us are. I don't want to put myself in that bracket, is meeting a person and knowing him so that his or her requirements can be conveyed and solutions provided or customized basis his requirement. So this is where I divide my customer. Now, this leads to the customer centricity aspect of the services that we are providing. A pensioner is also receiving services through postal network, through banks. He is also looking forward to have cash and currency because there where he trusts is. Going to the second part of your question where you say, what is that the different strategies a banking or an insurance sector or a BFSI sector can do is first and foremost build trust. And trust can only be built by being transparent and being communicative. Where we lack in doing this service to the society or our customers is that we are bombarding information, we are tagging him, we are tracking him, but we are not communicating to him that this is what will be the best suitable product, best suitable service. You should buy this or you should not buy this. Coming from the house of Tatas, trust is which is the cornerstone of any BFSI venture. Trust can be built up only by being transparent and communicative. We are bombarding, as we were discussing, 2 products per week from a bank, 5 products from mutual fund, 7, 8 IPOs in a month. Where is this customer going to understand that what is the product, whether it suits him or her or not? So first thing is building up the strategy of building up trust to make sure that the customer takes your negative advice also positively. The second part of it is you have to relate it to this when you're interacting with your customer is to educate him, which the government has done, about his financial fitness. Don't sell golden eggs to every individual. People may not require it, people may aspire to have it. Not every investor in the stock exchange or in a edtech or a fintech company is aspiring to be. What is that will take care of him, whether he's buying an insurance product or he's buying a banking product, will suffice to his requirement. I don't need to sell a 100-year insurance policy to a person who doesn't want to live for 100 years.
Or is that already 760?
Right. So we are trying to sell it just because we have a product and not understanding what the customer is actually looking forward to. People may not require a digital transaction all the time. I was talking about farmers and agri sector. They may require certain amount of digital transactions. It's a seasonal aspect of their business, but they may not require it all the time. Other impact is the financial empowerment which has happened by the government by putting money directly into the accounts of these people. How best can you leverage this? In your product journey, in your service journey, this is a dark spot, this is a blind spot, which I personally have researched and noticed that most of the insurance or banking sector is not looking at what is that we can make out from this financial empowerment which the government of India is giving. A subsidy or a grant or a pension, a Ladli Behna Yojana for 3,000 rupees a month means 36,000 rupees in a bank account of a housewife which does not have 1,000 rupees a month of saving in her account till 5 months back or 10 months back. How are you going to leverage it? Are you missing the crux of how can we give her a financial health product, or how can we make sure that she enjoys that benefit fully? Or are we only trying to sell her the mixies and the washing machines and the television sets or the gas cylinder? So right product, right nudge, and there's where you can take it. Third part is, how innovative are you in terms of making that you are differentiated? Insurance club with a mutual fund, or insurance club with a ULIP, or a banking product club with certain personal loans, a banking product related to your bonus points. You are creating segment within the segment, right? You are creating Akash classes for a student who is aspiring to do it, whether he needs it or doesn't need it, but your combination is not happening. So if the student flips to join a Akash class to qualify for a JEE, he actually is losing the marks for his 12th standard. So that innovation for the segment within the segment is actually going to help you. And that's what the strategy should be.
No, absolutely. And I think you made a very good point of understanding your customer need. And I think even in the previous session, where the firms fail is to understand what the customer wants, instead of just coming out with new products and apps. Now here, so Sanjay, one problem, facing the industry, I think we all understand that, what we need to do, but the problem that comes up is, so internally you have only your customer data, and, with your budget and your margins, you can do only as much. But there's a lot of data, a lot of information like lying outside. You have your UPI data, you have account aggregators, there's a lot of data which you can actually partner, with fintechs. And so is that a way out where like you can go and understand your customers from the data that he has put it out on the web or through partners? That's a non-linear way to understand the customer needs and come out say with new products without investing yourself into it.
I think without investing is not going to happen. But yes, I would divide it in two parts. One is pre-onboarding and one is post-onboarding. Pre-onboarding, there is a risk of what kind of customers are you attracting, because most of the online offers are free, right? So it attracts definitely the mule accounts, which is a major issue right now facing the industry. I think you must have been reading in the paper, RBI is now really coming down heavily on mule accounts and the use of them, and trying to come out with innovative ways of trying to hold the money or trying to do a better KYC. So there are two parts of it. Using fintechs, we have learned that we can access the customer in a much better way in understanding whether he has an account, does his email ID is honey.com or honey @ or whatever, or his full name Sanjay, Sharda or whatever, at so and so. How old is the email ID? How old is his mobile number, right? That's another way to check whether he is able. And this is what fintechs bring to us. They're able to do all this via API and tell us whether this customer is the right profile to onboard or not. Second comes post-onboarding. I think that's where fintechs help the bank in terms of, we just had a session with the main sponsor here on how AML works, right? I think that's another, and AML is nothing but anti-money laundering. So that is another way to fintechs help us. A third way, which is we are using fintechs, especially the small finance banks, is to expand our distribution. We have limited number of branches. We want to reach maximum customers. How do we do that? We get a fintech partner who helps us to onboard customers via the video KYC route. That's another interesting proposition. And that's really helping, at least Utkarsh has been able to scale up our deposits in a very big way using fintechs. If you go to moneycontrol.com, there'll be an ad which will say, get 9.1% interest rate or something for a senior citizen. You click on it, your first name will come as Utkarsh. Okay, so Money Control also works for us in terms of getting customers. So I think that's something which we have built up. A lot of the other apps, which, this is like...
Innovation.
That's one of the innovations, right?
Process innovation.
Yeah, process innovation, yes. So it's something which we have been, I've been very proud to, tom about it, because that's something which I've done in a very systematic, in a very short time. So these are the 2-3 things which fintechs help us, a bank, not only a small finance bank, but any type of bank, to scale up. I think, and as we go along, and RBI is able to open up, instead of just being a digital DSA, which most of the neobanks are today in India, they will certainly see digital-only banks coming up. I think that's a matter of time. If you go to countries like Philippines and some of the other countries, there is a lot of digital banks which are there, which have still not come to India. So you will have digital bank is nothing but a app-based bank. There are no branches. They use cash points to disburse cash and pick up cash, but they are very highly efficient and give a better ROI to a customer than a normal universal bank.
That's great, and it was good to hear about money control and the innovation, that you guys are doing. So now, see, at one end, we are trying to understand our customers via our partners, and the customers are themselves going out on social media, and that data can be leveraged to understand them more, whether you could partner with a fintech or a telecom data or account aggregator. But there's also a risk associated with that, from a customer point of view. The customer consent needs to be taken, and the trust needs to be built. So Ashton, what needs to be done in the ecosystem in terms of, the regulations, which are required to ensure that, the customer risk is mitigated. So there may be some customers, who don't care about their information being public or being used for marketing, but there might be some others who are very sensitive and, they don't want their information to be leaked. Now, how do we as banks, as insurers, as mutual fund firms, how do we know which customers we can use their data for, for targeting, and for which ones, we should keep it, sensitive. We need the architecture, we need to be, building that kind of an architecture and some audit mechanism to ensure that, we are there. So what are your thoughts around that topic?
Tough question to answer in a public forum, because I don't want to preach to the regulator. I think there are enough sound minds there who have their own decision making around it. But if I have to give a view on it, then let's try to understand. Innovation comes first, followed by regulation. Okay, because innovation are ideas. It could be any idea. It could be the creativity of an individual, a group, a team. Regulation will follow later by seeing the impact of the innovation on society, on individuals, on organizations. The key is that the innovation and the regulation that follows, there should be a very small gap between the two. If the gap is too much, then it could exfiltrate and create issues within the ecosystem. So keeping the gap small is important. Secondly, if I look at it, again, when we are looking at regulations, regulatory changes, compliance requirements, the circulars, the advisories that are put off, they need to essentially be collaborative in nature. It is something which should not be a one-way street. It should be also take the opinions of the various stakeholders, the shareholders, the stakeholders on board. It should be inclusive. When I mean inclusive, we have various players in the ecosystem. We have the large behemoths, the PSUs, we have the domestic private sectors, we have the foreign banks, we have some of the cooperative banks, we have some fintech players, some small players. Let's try to be inclusive, create a level playing field for all. Okay, and that's what the regulation takes care of. Again, I'll also say our regulator is doing a pretty good job on that. So we basically not seen them diversing too much from what I'm already speaking about. But we need to keep that in mind whenever we look at regulatory changes, we look at compliance requirements and the likes. To to the other question, when we talk about advancements of technologies, etc., then we come into the entire data security, the data privacy, the consent management, etc. And we have been putting out laws, we have been putting out regulations on the same. So the DPDP Act is a very recent example. Okay, unfortunately, we've seen some delays around it being implemented, etc. But I'm sure it will soon see the day on that. But we have been putting regulations in place, and we have kept it that. One key aspect to remember is that no problem can ideally be solved at the same level of conscience that created it. This is to quote someone famous. So we always have to be adapt, and be adept on it. Thank you.
Yeah, no, very nice. I think you have covered it all very well, and I heard the bell as well. So I think what we can do is, if there is any question from the audience, we can take one question, and then we can close.
So,
Or you want to add? Yeah.
Yeah, so I'd like to add something to what is. I was hearing Advocate Aditya Goenka ji when he was talking, and I remembered of one of the scenes which I used to see in a movie, कि मेरा वकील आपसे बात करेगा. So regulator and compliance is happening in such a fashion that any move you take on an app, you add a feature. The gentleman from the technology background was saying that we are doing the face recognition, but how can you crack it? You don't know. Somebody else, maybe Lalit Kumar, may look at Lalita Kumari, and you may suddenly end up giving an account to somebody who does not have a penny. So the situation with compliance and regulation is, for every single step, and it has become a very complex scenario. Let me tell you very frankly, because whenever we develop communication, the first thing we have to go is to go to the legal department compliance and get it vetted, right? So difference between a sharbat and a sharab is what the legal and compliance decides, and not what the marketing and communication decides. So scenario should be the other way around, which you said, rather than keeping in line with what regulator is saying, the industry should come up with a set of norms which are self-regulatory. The banks should be given, the insurance companies should be given, the fintech should be given the liberty to become self-regulator. And then you identify the anomalies in the department or anomalies in the function and how operationally that can be taken care of. I think this is very important for the growth of BFSI sector, because this is something which is stopping us from, even in your bank, you find it doing a KYC is the most hectic thing. You have a Startup India campaign, but the difficult part is getting your KYC, e-KYC done to get your startup done. Opening a current account is as good as going back to your farmland and plugging it out, and they dig out everything, what your forefathers did. Why you want to do it, you have to have this, that, etc. You're not going to support the industry unless you walk into a branch or you digitally put in and you get a current account. Because anyways, it's my money. I can put it on a savings, FD, whatever, I do that. So the self-regulation should be something which I think the panel should also think over it, and the industry should think over it, that self-regulation is something which is required more than a regulator coming in. And so there's a difference between a teacher and a headmaster. So teacher teaches you, which is a self-regulation, and then there is a headmaster who tells the teacher what is the subject to be taught to which class. I like to end on that note.
Yeah, no, absolutely. I think there's a new, I think it's a takeaway, I think from this session should be self-regulation. And, I think the firms and their CEOs or leaders who build that culture of self-regulation, would be appreciated in the long run. I think that's, if there's any question we can take, or we are good to go. Okay, yeah. Thanks everyone for your time. Yeah, thank you.